Hi, it's John from Sciacca's Accountants and Advisors. Alright, so it's that time of year, May 2019, when we need to focus on tax planning before the end of the financial year. So what I've done is I've just written down some notes on what you need to do or consider before June 30's finished and dusted. Business travel. So when you're in business, just to let you know, and you probably know this, you can claim say costs such as airfare, train fare or taxi fares. So make sure you keep your documentation, especially when it comes to train and taxi fares. Accommodation and meal expenses. So you can claim those costs if you're in business travel and you stay overnight. Alright, motor vehicle expenses. So what we can do is we can claim, say, motor vehicle expenses 66 cents per kilometre travelled up to a limit of 5,000 kilometres per year. So that's a good, easy one. What you need to do there to comply is make sure that you keep a diary record of the kilometres travelled. And the best way to do that is keep a record for a 13-week continuous period. Instant asset write-off test. So what that means is assets that are net of GST costing $20,000 or less can be deducted if you purchased those assets before the 2nd of April 2019. Following the budget, they brought it in where if you bought an asset and it costs more than $30,000 net of GST, on the 2nd of April 2019, you can write that off. So that's individual assets. So it doesn't have to be $30,000, it could be $5,000, $6,000, $7,000, $10,000, $15,000. Entertainment expenses and traffic fines. So this is a good old favourite. These aren't deductible. Now they might be incurred, or you might have been slugged a fine or gone out for a business lunch. They are not tax deductible. They are costs that are incurred in running your business, but what happens there is that they're not deductible and they can't be claimed in your tax return. Superannuation. Alright, this is a really important issue here. So if you want to claim super as a tax deduction, it must be paid by the 30th of June 2019. The best thing to do is pay it, say, the first week leading into June 30, because the super fund has to receive those contributions before June 30. Now this is an important point. Always make sure, I really stress this, to pay your super contributions by the 28th of July, the 28th of October, the 28th of January and the 28th of April. Because if you don't, basically you look for a massive headache with the tax office in relation to paying your superannuation late. So what we'll focus on now is small business tax concessions. So if your turnover is less than $10 million net of GST per year, what can happen there is that instant asset write-off applies to businesses where your turnover is less than $10 million and we can claim $30,000 per asset. So again, it could be furniture and fittings, it could be computers, it could be scanners, it could be motor vehicles, say second-hand, costing less than $30,000. You can write that off as 100% tax deduction. Looking at the next point here is the small business income tax offset. So that's eligible again if your turnover is less than $10 million. So what that means, it's an offset. So it basically comes off the tax that you due. You don't get that refunded if you don't have any tax payable. It just comes off your final tax bill. So we've covered, say, instant asset write-off, immediate tax deductions for expenses that you can prepay. So that's a good old favourite. So you might have costs where, that cover within a 12-month period, 12-month period, so you can claim that up front. So that might be, say, your registration costs, even costs such as rent, you can prepay. Now, where that would normally happen is where your business has come in for a one-off windfall in the 2019 year. So it's worthwhile looking at prepaying expenses and offsetting those expenses that you've prepaid against income that you've received that was of a one-off nature. Okay. And the last one that we're going to focus on is stock take. So basically, if, say, for example, there's no requirement to keep a stock take if, say, the movement in your stock hasn't is less than say $5,000 per year. So that's basically it. It's quite a lot in relation to the tax tips for small business. If you've got any questions, and I'll repeat myself, it is quite a lot. Give me a call on 3357 553 or email me at john@sciaccagroup.com.au. My next video, I'll show you a really great tax tip, and basically I'll show you how you can pay off your house or your rental property tax-free. And that's correct, it is tax-free. So wait till the next video and I'll go through it with you. Have a great day.